Good morning and welcome to the Killik & Co market update. It's good to be back in the office. Markets have had a bit of a wobble over the last couple of weeks because of concerns about the level of debt that some companies in China have. Here's a chart for the S&P 500 over the last year, and as you can see, the index has come off its record highs, although it has picked up a bit over the last couple of trading sessions. So what's been worrying markets? Well, it's the level of debt that a big company in China called Evergrande has. Evergrande is one of the largest property companies in China. It's expanded hugely over the last few years. Apparently, it's built over 12 million homes for Chinese consumers, but it has built up a lot of debt. And apparently at the moment it owes over $300 billion. Earlier this year, the Chinese authorities launched some new regulations that restrict the amount of debt that companies like Evergrande are allowed to have in relation to the amount of cash and equity that these companies have on their balance sheets. And this has caused some problems for Evergrande. It's been forced to sell some properties at low prices so it can shift them quickly, and there's now concern that the company may start to default on some of its interest payments. This would be bad news for Chinese retail investors, lots of whom own retail bonds issued by the company. It would be bad news for the dozens of banks that have lent money to Evergrande, and it would also be bad news for Chinese property buyers, lots of whom have put down deposits with Evergrande for properties that have not yet been built. So there's a lot of speculation about whether or not this company will collapse. Here's the share price chart for Evergrande over the last year. It trades in Hong Kong. As you can see, the share price has come down a lot over the last few months due to these concerns. So there's a lot of speculation about whether or not the Chinese government will bail out the company. On the one hand, letting it go bust would send shockwaves through the Chinese economy, but on the other hand, the Chinese government is trying to encourage wealth distribution and wealth equality across China, and bailing out a company that's largely owned by a Chinese multi-billionaire doesn't really send the right message. So it's quite uncertain what's going to happen here. We're watching the situation very closely, but in the meantime, it's certainly true that investing in companies that have links to China is certainly a lot more risky than it used to be. The gas price here in the UK is continuing to rise, as my colleague Nick touched upon last week, and this is largely being caused by an increase in demand as economies around the world start to reopen following COVID. As you can see by this chart here, the gas price has increased very steeply over the last few months. This chart shows the price over the last 20 years. So who is going to lose out from this rise in gas prices? Well, obviously buyers of gas, but also buyers of electricity. If you have a look at this chart here, you can see how most electricity is generated in the UK at the moment. Gas is shown in the blue, and you can see that it currently accounts for about a third of our electricity generation here in the UK. So who's going to lose out from the rise in the prices of gas and electricity? Well, let's remind ourselves how these markets work. Let's look at electricity to start with. So first of all, we have the generation companies, which are responsible for generating the power. We then have the transmission companies, who are responsible for moving the power across the country via the grid. We then have the distribution companies, who are responsible for moving the power from the grid to individual homes and factories. And we then have the suppliers, who are responsible for buying the power from the generators and selling it on to individual consumers and businesses. The transmission and distribution companies earn a fixed fee, which is heavily regulated. So it's the suppliers that are really taking on the risk. If they haven't locked into a fixed price agreement, then they're going to end up paying more for power and potentially losing money if they've agreed to sell that power onto consumers at a particular price. Consumers could also be losing out if they haven't locked themselves into some sort of fixed price agreement. So we could have potentially lots of losers from this particular situation. Over the past few years, the regulator in the UK has been trying to encourage more competition in the gas and electricity markets. So we've had lots and lots of new entrants. Here's a chart showing the gas market and the number of participants and their respective market shares. As you can see, several years ago, British Gas, which is owned by Centrica, used to have an absolutely massive market share, and that's been declining quite heavily in recent years as we've seen lots of newer entrants coming into the market. However, some of these smaller companies are less able to deal with supply price shocks, and therefore we've seen a lot of those companies going bust over the last few months as prices have started to move quite steeply. So the result of this is that consumers have ended up being transferred back to some of the bigger providers. And the upshot really is that a lot of consumers are going to end up paying a lot more for their gas and electricity. And in terms of the wider economy, this is likely to feed through to higher inflation figures here in the UK. I just wanted to briefly touch on SSE because I think this company can often be a bit misunderstood. So let's go back to this chart with the market shares. Now, SSE used to be quite big in the market for electricity and gas supply. As you can see, it used to have quite a big market share within this particular market. However, back in early 2020, the company completely moved out of the supply market by selling that part of its business to OVO. So as you can see at this time, SSE's share dropped to zero and OVO's market share increased quite considerably. So in hindsight, this was a very smart move on the part of SSE. So if you do have any utility companies in your portfolio and you'd like to talk to us about how they could be impacted by these rises in gas and electricity prices, please do not hesitate to give us a call. And finally, we've talked a lot in recent videos about the truck driver shortage that we're experiencing here in the UK and how this is contributing to supply chain problems and potentially higher prices. This week, BP has announced that it's struggling to get enough drivers to deliver fuel to some of its petrol stations, and therefore this week it's been forced to close some of its petrol stations. So this could cause further problems with supply chains and potentially it could lead to higher inflation. This week, the Bank of England has said it has decided to leave interest rates on hold here in the UK, and it has said again that it believes the inflation we're seeing at the moment is going to be temporary. However, it did say it believes inflation will rise to 4% before the end of this year. Moving on to Have a Look next week, we actually haven't got any companies on the Killik & Co covered list with expected reports coming out. So that leaves me to wish you a very happy weekend, and I look forward to seeing you again next Friday.